Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 12 hours, the market has come back relatively bullish after the Federal Reserve hiked rates by 25 basis points up to 4.75 to 5%. From there was a slight dovish turn in the statement, which could see now a pause and therefore has actually limited the dollar index to recover, and therefore the market might see a little bit more terms of losses for the US dollar as the rest of the markets gain. We've seen that the midway point on the RSI has rebounded, and with a Marubozu candle in play, as well as challenging this 67.35 and not backing away this time like previously on the 4 attempts, may see a break and head on towards the region where the 60-day moving average is, which is somewhere around the region of 68.5. The strength in euro still maintains into its sixth consecutive challenge. The market is now heading on towards 110 as a potential target. We are getting overbought, and no doubt we will see a possible candle like previously here once we get closer to this range, because profit taking will be very heavy as the market will likely bow out of their long positions in case we do see a very sharp rejection. Nevertheless, in light of how the pattern looks, the bulls are still governing the track, that is to climb higher. The market is still very much focused on the 129.80 to 130.15 target, and beneath there, if breached, will give further extension to this fall as the yen strengthens to 127.70 to about 128. Technically, we are seeing a negative response in terms of the indicators as well as the candle, so the market will probably continue to navigate lower. Looking at sterling, well, all eyes on the Bank of England when 25 base point rate hike is expected, and therefore could see a little bit more volatile or whipsaw price action and head towards the region of 124. But be on your guard when we got to this region before the bears came in bigger numbers. Finishing up with gold and oil, well, the market is attempting to recover as it looks back towards this top side region of $2,000 per ounce. I'm not a keen bull here. I think the market will fail due to the fact that the technicals are somewhat still lackluster to support the bullish case, and therefore could see a rejection and look back towards the bottom side of this range around 1,938. And also with oil, the market is maintaining a bullish case with a weaker dollar in play, looks towards 72.50 as a potential target, and reassess. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.